everything you do is about getting great talent and harnessing that talent and making that talent better and better.
I love that, coaching the individual, not coaching the deal. Welcome back to another episode in our Chief Revenue Officer interview series, and delighted to be joined today by another fantastic leader who is in the hot seat. So today's guest has a wealth of experience leading organizations for the likes of Databricks, MuleSoft, as well as Aivan. And he has now put down the operator hat for the meantime to launch his own investment firm, where he is founder at Celero Ventures. For those who haven't guessed it, welcome to the pod, David Wyatt.
Hey, Matt. Thanks for inviting me to talk today. I'm really excited about having a conversation with you. And let's get stuck into it. I'm really excited to talk to you and answer any questions.
Awesome. The theme for our conversation today, David, is all around how do you get more out of your talent? And I know this is something that's very front of mind to chief revenue officers that I'm speaking with on a daily basis. So really looking forward to diving deeper and unpacking that in a bit more detail. Before we jump in, David, it'd be great to hear a little bit more from your perspective on your journey today. How did you get into revenue leadership and become CRO and then now switch over to the investor side?
I mean, I've been super fortunate in my career. I actually started out if I go right back, I started out as an electrician. There's not many folks know this actually, but now they will. I actually started out life as an electrician. I was a terrible electrician, and I used to have extremely spiky hair because I got several electric shocks. But when I got to the third electric shock, I'd quit and I'd do something different. And I went to university and went to go to do a business information systems degree, which is a combination of business and IT. And then fast forward from there, left Manchester, as most did, to go to London and got a job as a consultant. And then from there, I got into sales really quickly, went to the dark side, loved it, loved the chase, loved the energy, loved the competitive side of things. It was just good fun, but learned so much with some great people. And I think that made, I harnessed a lot of those learnings throughout my career. Probably changed me as a person as I developed too, which is really important. You learn from those around you. And then I was really fortunate to stumble across MuleSoft, Ross Mason, Greg Schott, Simon Parmet, awesome leaders and founders of a great startup. We took that to IPO, took it through major growth transformation. I remember the ASP at MuleSoft was 9K. We accelerated that up to about 300K. It was amazing growth. And we took it public and it was a great run. And finally it sold to Salesforce. I then went to Databricks. I was the first on the ground for Databricks, Europe, Middle East and Africa. And, a multi-$100 million business in its own right when I left it, and amazing one there. And then went on to be the chief revenue officer for a company called Aivan, which is still going from strength to strength today. And what a journey. Parallel to that, I've been building a VC with my business partner, Nick Cochran. Nick and I have been investing in early stage software companies doing pre-seed, seed and Series A. And that's just got really exciting for us. And that's what we do now. We're investing in software companies and we're actually raising funds to grow our operation to be a force of nature in the VC world. So loving every minute of it, spending all the time with great startups. And you know what? What's really interesting? That journey has all been about two things. One has been about working with amazing talent, and two is about finding amazing talent. Whether I'm, the topic you say about today is got to be around talent and talent growth. And I think fundamentally, everything you do is about getting great talent and harnessing that talent and making that talent just better and better. And I think, it starts with finding talent. If you look at where I am today and investing in companies, we're looking for top talent. And I learned probably the best enablement I had in my career was at MuleSoft. And it was about learning to find talent. And it was gruesome. I'd do 30 hours a week interviewing people. And that was a lot of work. And then I'd do the day job. And fundamentally, what that taught me was the caliber you had to get had to be an A+ with no exception. And, every B you take, you're hiring another 10 Bs and Cs behind them. And we really had to focus in on that, whereby Greg Schott told me that he would interview the first 500 people, and he did. And therefore, I had to interview every single person who walked into that office in London when I started. And then every European office that we opened as well, every EMEA office we opened. And I did the same thing at Databricks, right? And what that meant was that you could build amazing teams. And, every time we hired somebody new, they'd bring up the caliber of everybody else by 10x. It'd make everybody to want to perform 10x more. And now and again, you make a mistake. We're only human. But you mitigate the number of mistakes that you made, because that 10x multiplicative can go the wrong way as it can go the right way as well. But there was a lot of foundations under that too. One of the things we used at MuleSoft was a data-driven performance track record due diligence process, which was born out of a book which was called Hire With Your Head. This enabled you to look and be very data-driven in the way you inquire when you take an approach to an interview process. And it drives you to the nature of digging deep into understanding where that person has performed and where they may not have performed. And it really gets under the depth of the track record. That was super helpful because it really does give you metrics and data to make decisions.
And just double clicking into that for a second, David, is the framework that the book equips you with, are there specific tools that you're using to help you conduct those?
I mean, the book in itself gives you a framework. And I mean, if you're not into reading books, like I can't read a whole book these days, but chapter 4 gives you everything you want for that framework, actually. But that's exactly what it does. It gives you a framework, and what it'll help you do is designing your question process to actually fundamentally think about who and how you hire based upon a data-driven approach. So it defines a framework. You still need to be able to use that framework, right? You still got to use your own EQ and your own IQ to be able to leverage that framework, which actually brings me on to the next part, is which, I found the best interviews also I've had is you've got to get the data, but also understanding the human being, is because ultimately that's what it's about, is what drives that human being. One thing you can't make or you can't educate somebody is drive, tenacity, do what it takes. We used to call it at MuleSoft before DWIT, do what it takes, which I love. And we can't train somebody that. They've either got it or they haven't. And actually, some of that ties to track record as well. And again, you can tie data to that, but also understanding what they've done and what achievements they've had in their life and how far. Those folks who've gone the extra mile. And the extra mile isn't just over exceeding your sales quota. It's actually, we used to have this thing called paving roads. So thinking about how you actually create something new that's a process that's doing something different, better, more efficient, faster, if different than the competition, that's a repeatable process. And that was, you found those individuals that not only blew the numbers, but could pave roads, could help educate others, build processes, reusable assets, things that could be introduced to the business. And they were super powerful. And those were great humans.
On that point around DWIT, David, hiring for that will to do the role, it just makes complete sense. If you kind of cast your mind back, if I'm a hiring manager in the market today, what are some things that can help me identify those candidates that have that will and that DWIT mentality?
I think, you get a CV for a reason. And I think it's also, quite dismissive to go in an interview with someone and not use a CV, because that individual spent a bunch of time writing that CV. I mean, that's their proposal to you. This is my proposal for me to work for you. And you're then assessing that proposal to see, and also they're assessing if they want to work for you at the same time, right? So, it's kind of our duty to ask the right questions in terms of what they've done in not only their career history, but their personal history as well, because you're actually trying to get to know the individual. And I think understanding some of the things that they've achieved, and it might be something like winning in a soccer team at school versus completing and being the top of the year in an exam, or it could be associated to a deal that was super complex and they've cracked the code. But they've shown proven ability to do things different and be able to achieve things that others might recognize as they can't be achieved. It's, whether you use the analogies of breaking down walls, jumping over hurdles, whatever you want to say, those things you can see that they'll explain the hurdles and the challenges throughout that task or thing they've achieved and how hard it was to get to them. And then they'll explain how they did it and understand how they did it. And you'll see what actually you find is people like that are really methodical, because what they do is they train. Like, great athletes don't just get born great athletes. It doesn't matter how athletic you are, you're just not born a great athlete. You still have to train every day, day in, day out. And that's what great athletes do. And these awesome people, what they do is they train, but they have a methodology and they train to that methodology. And what you're looking for is examples where they've taken a methodology and trained to that methodology. and had the self-drive to do that.
Yeah, I love that. I heard something the other day around, not sure if you follow American sports, but Steph Curry, the basketball player, someone there was talking about, he's known as the greatest 3-point, free thrower in NBA history. But actually what people don't recognize is that for the last 25 years, he's thrown every single day, practice for hours, those same shots. And someone calculated that he does, several million free throws a year in order to get to that level.
Right. I mean, and I think that probably goes for most sports people, right? And I think when you find those individuals, you can really tell. The other thing that's quite interesting about those individuals, they're really coachable. And coachability is huge. Like folks who know you've got a desire, they've usually got really high EQ. IQ is huge. I remember actually having the same discussion with Greg. It was actually in my interview process with Greg. And Greg said to me, track record is the first thing you find out. And I was like, no, IQ. Because I think you can tell by the way you interact. That's the first thing you do is you interact with somebody. You can get their EQ. But we both laughed about it. But equally as important, IQ is the ability to, dig in, but also want to be coached as well is really important. And, again, these are, like you said, you mentioned the NBA player. Like for anybody who's training to do anything and excel at that thing, it's about a repeating motion. But if they can shave a millisecond, if they can build in a millisecond of efficiency, that means a ton in sports. And without wanting to use a sports analogy for everything in sales, the reality is if you can get there, a millisecond quicker or be a nano smarter, like literally it's about getting ahead of the curve. And it's all about data. And you get that data from accessing as many folks as you can, but also understanding your sphere of influence in an account. And I think, great, amazing salespeople have got that natural desire and that intuition to be able to understand more, to put them at the very front line. And I think that really makes a difference. But it's kind of interesting as well. It's like, hiring people is really important. And as I said, like half my week was hiring, especially when you're hyperscale growth, half the week is hiring. And even when you fill your quota of headcount, you're always pipelining because everybody's after the same amazing people. But then the second part of that is like, once you hire them, you're not out of the gate because it's kind of interesting. I've looked at productivity metrics from every different angle. And you ask any software company and they'll say, it takes 3 months for a commercial guy to ramp, six months for an enterprise girl or guy to ramp. And then for a strategic, it might take a little longer. The reality is when you go in most software companies, that's not true. It takes 5 to 6 months for a commercial rep to ramp in the first year, probably. It takes 9 to 12 months for an enterprise rep to ramp. And for strategics, they sometimes take you 2 years because they're looking after big, lumpy accounts. Now, when you're looking at payback and productivity, the metrics look horrible when you see that. And especially when you're trying to do triple, double as a startup. And then you've got the other balance of, okay, so we invest in our talent where we could get super expensive strategic guys and girls who go after these big accounts, or we go for a bunch of commercial account execs who can probably go after some of the medium-sized to large accounts. We're generally going to get SMB to mid-market. What you've got to be really careful of is thinking about your talent org in the right way that appreciates the ICP of what you're targeting. Because most companies go, let's go get great talent, but they don't think about the ICP, the customer profile of which they're focusing on is really important. And then when they figure out the top 2,000 accounts they want to go after, by the way, they're not all going to be HSBC, Unilever, JP Morgan. They don't have to be those accounts, especially in today's world with digital natives scaling really quickly and spending gazillions of tech. I mean, every company is a tech company today. And actually the ones that are being outpaced are born tech companies, right? And so when you're thinking about your organization, you have to think about what that looks like and how you want your talent to relate to your target market. And then you've got to have an imprint on that can scale. And again, I've seen many folks and managers do their organizational planning and they'll be like, I'm going to have these accounts here and I've got these guys here and, I've got this much budget and I think that looks good. And I'll be like, okay, so what happens when this scales out, these accounts go bigger and then you're going into next year? How's that going to work? And they just look at me and they go, and then all of a sudden, 6 months into the year, you're pulling apart everything you've done and breaking down all that talent that you've spent all that time hiring and making them disgruntled. So when you're actually planning to hire talent as well, you've really got to think about your organization and map it to your ICP.
Amazing insight. Like just clicking on that for a second, David, that planning process when you're sitting down and thinking about that ICP, what are some sort of techniques or approaches you've seen work well so that you avoid that situation where you're mid-year and your managers are suddenly scrambling, realize that they've probably overhired or hired the wrong profile?
The reality is you've got to build and plan for scale. As much, look, when you're in a seed or a series A, you're about as good to plan for next week as you are. But the reality, you've got to put a marker in the map. You've got to put a pin on the donkey, however you want to think it. Like, you've got to put something down there. Look, if it's 80% right or 80% wrong, you've chosen a strategy, but you've made a decision and you can course correct, because you always course correct it. But I'd rather course correct than course completely change. And so, couple of things. You need to really think about what's in front of you now in terms of account and opportunity. That's the first thing, because you can see that's a known. You can look at what you're going for, because what resonates in your ICP and you think it's going to work. So that's a known unknown. And then here's the danger zone. The stuff you really want to get, but you don't know how you're going to get it, and you haven't got a strategy to get there, and you've still got to build on that because it's too early in your life cycle. And that's an unknown, and that's the danger zone. So you've got to think about your known knowns, your known unknowns, and your unknown unknowns. And you need to do that with a measured focus on risks and say, right, okay, I've got to achieve this growth. I'm going to do it by doing it with these known knowns because they're safe bets. I'm going to do it so much with these known unknowns because there's a good chance I'm going to get whatever probability of my weighted pipeline I'm going to get here. And then the unknown unknowns, you've got to be just really strategic, and you've got to A/B test the market to go, actually, where am I going to invest? And then the other thing is as you then plan that out, you map that out, you map it out to scale in terms of what that growth looks like based upon those market opportunities that are in front of you. So if you're expecting 50% growth, then you're going to do some of it through SMB, you're going to do some of it through enterprise, and you're going to do some of it through strategic. What's the balance of those accounts? What's the balance of the verticals? What's the balance of the geographies? You've got to look at the TAM, the SAM, and the SOM. Speed, there's more data there than you expect to start with. And there's market data, which is good, but it's really hard to get good quality market data. But the more you can research it, more you do the critical thinking, the more you can be data driven around what's in front of you, and then you model it, then you've got a better chance of success and to de-risk your model. But the one thing you need to do is be constantly reviewing that model. And when I say constantly, every weekly forecast should be tied intrinsically to that model. And then you'll step it up and you'll do monthly reviews, weekly business reviews, monthly business reviews, quarterly business reviews, and annual business reviews to make sure that you're in the data. But you've got to do that in some automated manner so everyone's not building reports all day as well, which is a hard task to do. And the way to do that is get an awesome ops leader, which I have complete conviction in. In fact, my first hire is always get an awesome ops leader. I'm just conscious of time, but I think one of the things I want to talk about as well is, finding talent, building your organization, building the structure is really important. A lot of companies fail at doing that, and therefore what they end up doing is constantly fire salespeople because they haven't got the messaging right, they haven't got the tooling right, they haven't got the ICP, right, they haven't got a bunch of things correct before they kind of loaded the gun and sent everybody off. And I think the reality is, you've got to get them things right. But also, once you get amazing salespeople, they've got to want a reason to stay. And I think that reason has got to be, I think back in the day, also, there was a horrible stigma that salespeople were just only wanting commission. Well, salespeople like commission, don't get me wrong, but now salespeople like commission and they like equity because they want to see the value of the investment they're making going up. And don't we all? I completely agree with them. But in addition, they want fulfillment, they want growth, and not every salesperson wants to be a sales manager. Some do, but some people just want to be great salespeople. Some people just want to run a big account. Some people just want to run a small team. Some people want to go into sales enablement. But in my journey, in my career, I've kind of defined my own path in a sense without wanting to try and sound arrogant in any way. But I have. And seldomly, unfortunately, I think it's better now than it was than probably when I started my sales career. But sales folks really end up talking about their career and career growth as much as they should? And I'm as guilty as the next person who's been in sales leadership because, guess what happens when Johnny's got a big deal that's going to make or break the quarter? how much time did Johnny get to speak about their career goals? You know, what do you want to do, Johnny? Actually, tell me that later. What's happening with the deal, Johnny? That's what happens, right? And then, Wendy comes in and she's got a bigger deal. Same things happens with Wendy. And then Steve comes in, got nothing to sell. What do you want to do with your career, Steve? Well, Steve, you're going to have to do something because you're not selling anything. You know what I mean? So really what you've got to go back to is thinking about how you coach these folks. And there's a couple of things like it's kind of interesting. Someone said to me many years ago actually, coach the individual, don't coach the deal. And a lot of sales managers, and we've all done it, are guilty of getting in a room and coaching the deal. Things like Challenger, are absolutely brilliant in terms of helping individuals think about developing a point of view. I love Challenger. We really, really absorbed Challenger outcome-based selling at MuleSoft. In fact, we defined what we saw was to be outcome-based selling at MuleSoft, and it was really cool. But it made people do what we called the critical thinking, which was really important about differentiation. How are you going to carve a wedge that's going to drive a customer to be compelled to take action? But it was about critical thinking. It was about getting intelligent people in every room and making decisions. And we did that, and that forced a coaching motion. And that was a big shift from coaching the deal and versus the individual. That was really important. Secondly, was people who wanted to develop and grow. I'm still a huge believer of this. Is making them mentors is brilliant because they have a natural desire to want to grow. So they have a natural desire to want to teach because they want to share their learnings. And by doing so, they grow as individuals. They feel more fulfilled, and other individuals around them who probably almost desensitized because they're with somebody they trust and it's not the manager, that they become more coachable, which is great. I love mentor programs, but I love mentor programs well executed. Unfortunately, there's lots of mentor programs that are not well executed, that are horrible, and they're very almost too structured. They need a definition. They need a rigor around them. They need a structure around them. They need focus within them, but they also need true coaching, which is done from experience, which is done from methodologies, which is done from learnings and best practices. And, you get that right, and it's a huge benefit. It makes everybody want to be better.
I love that philosophy of coaching the individual, not coaching the deal. Speaking with CROs every day, it feels like that's a really big challenge in terms of getting their frontline managers coaching individuals rather than coaching deals. Anything that's worked from your perspective, David, in terms of setting those frontline managers up for success? And you can kind of sympathize with them, right? Because their team targets on the line, their kind of self-interest is in moving the deal forwards.
And I've done the job, right? I mean, in every startup I've been in as well, like I've been the first line manager with, I've always, VP of EMEA or COO. I've almost been like the first line manager in all of those gigs because I've been in super early, right? And did always have 1,000 people reported to me or whatever. The interesting thing is, you've got to make them part of it, right? So firstly is, when you're building something and you're building something at pace, you have to think about what, how, and why. And then once you've figured out the what, the how, and the why, you can then instill that with the people around you. So you got two options. You can either do the what, the how, and the why on your own, or you can leverage the folks around you because, you'll find that they have great input and great philosophies and things that they've learned that you don't know. So what I did was used to build enablement programs to be used in QBRs. And because what you'd have is a kickoff, and then which would be very modular, almost binary in a sense, and very useful, don't get me wrong, with a lot of new products, initiatives, messaging, tooling that you'd take away for the year. Well, then you get to the middle of the year, you've hired a load of people because it's a new year, and you've hired a lot of people in Q1. So they weren't at kickoff. They're not educated. They've done their online training or they've been to boot camp. But then if you get to the middle of the year, you generally have people who either forgot what they saw at kickoff or a bunch of new people or both, especially in high growth. And you could, at any time, I think I worked out that 70% of my people were pretty much brand new. That's nuts, especially when you're in your hundreds and over 1,000. Like, it's crazy. So when you've got that velocity, you've got to work out to enable them quick. So you've got to get the managers to buy in quick. Because actually your first line managers are the ones on the pitch, literally on the pitch with the team. They're going out every day doing the sales calls. So they're your most important ones. So what you do is you pull in your leadership team and you build an enablement program with the leadership team and make them part of it. So then they own it, they're part of it, they developed it, they own it, they feel like it's theirs. Everybody believes in it, it gets in their own belief system. And then we used to run QBRs, and our QBRs was we'd do territory planning completely separate. And territory planning was called territory planning, not QBR. And territory planning was a ton of territory reviews, and we'd go through all the data, what's their business plan, what are the KPIs, how they're performing against them, what's the plan for the year, how they're going to against the quarter, whatever. But the QBRs were very much, and we did manager QBRs, then we had the senior leadership team, then we had the manager QBRs. I mean, this scaled more over time. But then we had whole team QBRs, and you could regionalize them. You didn't have to have like a whole continent or whatever. You could have like regions or countries or whatever, based on the size of what you're dealing with your operation. But all the managers were fully dialed in, and they were part of it. And then what that meant is the playbook that everybody was digesting and learning was being done in a partnership with their leaders. And the mentors, what we did was we involved the mentors into some of the build part as well, and they were some of it. So we also got salespeople and SDRs and SAs and pre-sales and services people, all part of the program. So they were learning from each other, and we were getting all the best practices with real life examples of opportunities that might have just closed or just been successful or just gone live. And we took those points and we actually took those, and those were absorbed. And to watch the folks learn around them rather than going on some training module or some enablement course, this was way more powerful and a force 10 multiplier. And that was game changing. I started doing that at MuleSoft. In fact, we would walk out in the morning and open it out, and we'd all come out in fancy dress, and we'd have a theme. We did The Greatest Showman. We did a ton of them, but we'd come out and it just brought everybody down to the same level. It was great. And then we couldn't walk around like that all day. It got a bit hot, and then at the end of the day, you'd put them on for the awards, and we'd do the awards and have the fun, and it was great. It was awesome.
I love it. Look, this is what these conversations are all about. This is like no bullshit conversations with experienced operators like yourself, just sharing these amazing insights into what works. And hey, this has been an amazing conversation, David. It's been another great episode. For those who are listening to this chat, and I feel like this is just the beginning, you and I could probably do at least 3 more of these. If they want to reach out, learn more about obviously what you're building with Celero Ventures, or if they're fellow CROs that would love to connect with a like-minded peer, assuming LinkedIn's a good place for them to do that?
Yeah, LinkedIn and LinkedIn Connect. I love startups. I love growing them. I love being part of them. I love advising them. I love working with them. I love investing in them. It's truly in my blood.
David, thanks so much for coming on the show today, and really looking forward to catching up again soon.
Thank you, Matt. Take care. Have a great day.
Awesome.